All right, so in 2022 or 2021, you might have gotten a 1099K from Venmo. A lot of people are going to start seeing this moving forward. Now, if you got a side hustle going and you've been using Venmo, you just got to know what's going to happen here. So long story short, just so you know, it says in 2021 in tax year, they're going to issue a 1099K if your business profile has done over 20K in gross pay or 200 payments for goods and services. So basically, if you've passed the threshold for your state, the states vary a little bit. So let's just look at that real quick. For most of them, it's $20,000 in gross payments. But in Massachusetts, Maryland, Vermont, and Virginia, the threshold is $600. We're going to talk about how much you're going to get taxed. Are you going to get taxed on your Venmo payments? What's going to happen to you? And just got to help you understand exactly what's going on here. So I'm going to pull something up to help you quick fathom what's going on. A lot of people are wondering, do I owe taxes on this? What's going to happen? How do I handle this? What is happening with my Venmo payments? And just a quick reminder that if you're at anything over 20K is going to have taxes. That's $384 a week, 52 weeks in the year. If you've done over $385 a time, you're going to have some issues. So let's just talk about the taxation. Let's talk about what's going to happen. So first of all, what you need to know is if you get sent over $20,000, are you going to be taxed? Are you taxed on these Venmo 1099Ks? Well, the bottom line is this is basically showing that you're getting business income and you don't owe taxes on your gross. So the answer is no, you're not going to owe taxes on the full amount of your 1099K that you get from Venmo or from any of these cash apps or anything like that. What's going to happen is now you've got to account for it a little bit. You're going to have to show, where did you get this money? And you're going to have to show what happened. So here's a classic example. Let's just imagine that you were buying furniture, fixing it up and selling it. Maybe you brought in $26,000 in sales when it comes to actual sales. So your Venmo might show $26,000, but you're like, hold on a minute. I didn't make $26,000. No freaking way did I make that much. I had to go buy the furniture, right? So what we're going to do is we're going to talk about that. You go from, let's just say you showed $26,000 in gross revenue on your 1099K, but you spent $14,000 on this furniture, right? That's usually how most businesses are going to be, right? You had a cost of goods or you had like write-offs, and those are deductions. What did it take to actually get that? But let's look at that just a little bit. So then in this case, you'd show a net profit of $12,000. Now, if you've got the net profit of $12,000, here's what you need to know. Welcome to being a business owner. My first quick little tip, let's just get to where this goes, right? Number one, if you're going to be doing this, open up a business bank account. Number two, probably you can't do that until you register with your state, right? Now, remember, if you go to your state and say, hey, I'm a sole proprietorship, I'm going to be I'm a sole proprietorship, because that's what you are. You're going to have a Schedule C. You're going to be a sole proprietorship, and I'm going to show you how that's taxed here, just so that you're aware of it. But the most simple thing that you should be doing to help yourself show that you didn't just make $26,000, we have to show all of this is you're going to have to do some bookkeeping. Well, the foundations of good bookkeeping is get a business bank account, have all the revenue go in, and then use that business bank account to buy things and to actually run your business. Now, you're going to have to do some, it's probably good to get a bookkeeper or start learning some bookkeeping. You can use Xero, Xero. You can use QuickBooks Online. There's a bunch there, but you need to start showing that you didn't make $26,000, what your 1099K says from Venmo. You have a gross. So let's just say in this example, you netted $12,000. Now you're going to want to think of other business expenses that went into this. Your mileage that went into making that profit, the phones, the internet, even your home office are all things that will help reduce the taxes that you're going to owe because they're qualified business deductions. So you're going to want to read some blogs and take a look at things on what are the best business deductions. That's essentially all the stuff that actually goes into it. You can't do like designer clothes, but you can do clothes that are required for work. You're not going to be able to write off your actual vehicle. You're going to do mileage on your vehicle. It's all of the stuff that actually goes into creating the profits for the business essentially gets written off. So not everything, but let's just say in this example, you made $12,000 just to be easy. The first taxes you're going to owe are going to be called your Social Security and Medicare taxes. This is called your SE tax. We call it self-employment taxes. And what that is it's back when you worked for one corporation and it was your employer and yourself, when you went together up to the Social Security limit of $158,000 this year, 150 some odd thousand, up to the Social Security limit, everything you earned on a W-2, every wage that you earned, you paid 6.2% to the Social Security, and 1.9 whatever, it's 2.8 total on both sides. You paid a Social Security tax. So you always saw that OASDI or FICA, and then you'd have Medicare, MED, right? And what that is that's your Medicare and your Social Security. When you were an employee, you paid half of it. And your employer, you didn't know this, was paying the other half. So there was a 15.3% friction between your employer and you. Welcome to taxes. Now you get to eat all that. Fun, isn't it? Everybody would vote different if they all saw the gross and wrote a check to create their net. So right off the bat, you have to pay this self-employment tax only on the net, okay? So we made 12 grand. We got 26,000 in gross revenue. We had 14,000 in write-offs and all the stuff that it took to, and I'm using cost of goods sold. It's not the right word, but basically it cost $14,000 to do business. It meant I made 12,000, right? The first thing you're going to do is you're going to pay 15.3% on this $12,000, which is $1,800. Then what you're going to do is you're going to pay your income taxes. And depending on where you're at, remember we pay a progressive income tax. So now what you need to remember is that all of us, for the most part, it phases out. But unless you're making higher amounts of income, you have a standard deduction, or you can itemize it. But long story short, we have like the first 0 to 12,800 or whatever of your money is taxed at 0%, and then it's 10%, then it's 15%. And basically every dollar over certain amounts, you progressively pay higher percentages of taxes. So if you're making money in a W-2 over here, it's kind of like this gets added on top of that. So you're just going to have to remember that to a degree, you just owe your income tax, right? And you have state if you live in Minnesota, but if you don't pay state income tax, whatever. So let's just say you had an effective rate, which is basically you might pay 0%, then 10%, and then 15%, and then 20%, and 25%, whatever. You're going to pay income tax on that. So in this example, just using a 20%, which that might be high, most kind of average Americans, you're probably not going to be an effective 20% rate on all this. If you're not working, but if you are working, it's going to be higher. So in this case, total taxes is not that much. It's about $4,000. I copied and pasted and didn't write that. So you're going to write a check for $4,000 on this 12 grand. It could be that you're going to write a check for more like, $2,500. This is pretty high, right? 20% is probably not what it is. But long story short, guys, you're a business now, and your side gigs, whether you were driving for Uber or if you were buying and selling stuff, there's two laws that have come across. One, all these cash apps are reporting, and two, you got to remember our federal government is starting to require banks to report on even smaller transactions. They're running out of money. They're spending it all, and they're looking for it. So if you have Venmo and you're getting these 1099, this is just a real basic primer on how you're about to get taxed. Good luck. God bless. Keep that side hustle up. Don't let this discourage you. Doggone it. Go out and add value into people's lives. Fix up that furniture. Be an artist. Go do digital marketing. Go become a YouTuber. Do whatever. Go create and bring what God has put inside of you to the world. Add value and do it in such a manner that it attracts people's dollars and that you can go around and create. Do that. Do not shy away from this just because your government makes it hard to get into business and is trying to shake you down for more money. Don't let that bring discouragement. Push through. And then there's some things you can do for tax reduction. There's some stuff that you can do over time. We'll talk about that later. Good luck. God bless.